Once more, greetings all traders around the world, those that are subscribers to this channel. Welcome to this pre-market opening analysis, review, tape reading with audio. I am the consistent profitable trader, informed thinking trader. I'm greeting you from Suriname, and I hope that in about 3 minutes we will be able to see where the market has opened relative to where it closed last week Friday. Go to the chart. I have just uploaded to the channel a high time frame analysis video. It is recommended, go and check it. You will find our analysis, top-down analysis and review, and even the study of the economic chart. We are about to see the market open. We want to register that. So prior to that, we have also our news. Tomorrow is Monday the 10th of June. We do not have any US news event, and the protocol is simple. We will not be trading this day. It's probably going to be a small range trading day, but we will see how it play out. I normally sit at other traders their chat box and check how they handle the first hours of trading, the Monday until the lunch hour. Then I go to the chart and engage it. I'm now at a 1H time frame, and I will be dropping to the 1 hour 1 minute time frame, for I want to register the opening of the market at 6 o'clock. We have about 24 seconds, 30 seconds. We close here at Friday, and we want to see where the market open, and from there, this is one of the uncertainty that we have to accept. We do not know where, if it is premium or discount, where the market will open. So it will be given to us by the market makers, and then from there we will project and study and apply our analysis. We are about 1 minute. The market just opened discount and start trading going down, and I assume it will continue going up, but this is not the time to do any trading, but to know that the market opened discount, and continue for now, for this first minute of opening, continue to trade to the discount side. I will copy this and we'll make the note that this is the Sunday opening. That is all we do today, the Sunday of 9, Sunday opening price, at 6 a.m. it open discount, so this is low, and it is the current new week opening gap. This gap, let me adjust also the one from adjust this one. The current, normally we don't trade until Monday, so it is the high of Friday closing price. About 5 o'clock we had a closing price Friday, and now we will grade this level so that we have so that we can they now have this opening price. The consequential encouragement of this new week opening gap, we want to have it on the chart. Consequential encouragement of the current new week opening gap. That's it. So we have already finished. On the 1 minute chart, we see this opening, price open, trade lower, engage this buy side liquidity, and is trading toward the buy side for now. This is relative equal high that it had engaged. But as a small market makership, it may drop and continue going further. But that is not why we are here today. We are drop to this and then continue go further. We could have buy there. We don't buy. We don't try to do nothing at this day. We just make sure that we have the new week opening gap levels on the two asset most of the time. The Nasdaq, also open, trade lower, and now is continue going higher. It open right only 6 o'clock. Price open here. It's also the current new Sunday, the 9th of the month 6, and it open discount. It is low. I'll go there, change this current. How the largeness of the largeness of this fighting closing price, this is the high. The largeness of the new week opening gap can be considered. The larger the can be considered. But what we have to say about the opening range, a new week opening gap, is that it has influence in price delivery. Be it a trending day, we will not stay close. A trending day, we will not stay close to it. Be it a normal a consolidation day, we will be gyrating around this new week opening gap. For now, we have for the consequential and encouragement middle point of the new week opening gap of this week. It has registered. We can check also the Dow. We don't trade it, but we don't trade it. Price close there. You can make this. This is a closing price on Friday around 6 o'clock. I see a new week opening gap. Opening gap high. Friday closing price. Friday 6 opening gap. It is the high, and we are now just watching price trading and doing it opened. It's a close. It is a Sunday opening. Current new week opening gap. It is the low of it. It is the Sunday opening price. make sure you have these levels on your chart, for it does have influence on price. It gives us logic. It helps us see why we are in trending environment. If we are away from it, this is real support and resistance. It can be a resistance. Price can trade to this line and go up, or trade and complete this one, use this below. It is a very important PDRA. It is a very important price level for the whole week. We keep it on the chart for five new week opening gap. This is new week opening gap. What do? I normally, after I have registered this new week opening gap on all the sister, I go to the XM, Fear and Winter, the future contract of this is 1 minute store. Too much noise, too much uncertain. We are seeing I can travel a bit to the fiber ST to see that here we open discount opening. It's a large opening on this Friday closing price. It's a large opening, and the market has, for the forex trader, this new week opening gap Friday. This implies it is the high, and then the market opened on 6 o'clock. Whenever you see such a large new week opening gap, expect price to trade to the middle of it. And Sunday is the 9th of the 6th opening price. It is the low. All these markets that I normally use for my analysis, for my observations of chart, I try to have the new week opening gap on them. New week opening gap, then meaning this is the consequential encouragement. You can grade when it is large enough. You can grade this gap also is liquidity voice. Most of the time the market rally and trade to it. If it trade and it cannot pass, just can use the same logic of gap theory. Let me look the GBP. Go to the GBP USD. Also this one, if an opening, British pound doesn't show that gap. Oh, this gap is right here. It closed right here. It's telling us that the markets are not in sync. I'll tell you why that is so. Friday closing price should be this. Friday close, and this is the Sunday opening price. At 5 o'clock opening is right here. We know why we mark them. These are also sisters. They should be having the same landscape. This is the low of consequential, and you see, seeing a different thing. So they are not in symmetry, meaning price will sometime during now and before lunch, that is what I have tried for myself, regulate itself so that the market can trade in sync with the dollar index, which is marked to market with the currency. The 5-minute chart of the dollar index, this is a 1-minute chart. New week opening gap, high, we close Friday, closing price Friday. We see that the market closed Friday on this, and we see it open in a premium. And this is the high Sunday opening price, 9.6. This it open premium high, and this is then the low. Everything we see in the dollar is diametrical or opposed to what we have on the foreign currency, as they are inversely related to each other. The dollar index is marked to market with the foreign exchange market, but with the future index, when the dollar goes risk off, and there is a risk off scenario, they are allowed to trade lower. In this case, as dollar goes up, the NQES YM are allowed to trade lower. We have already defined it. We can do this. It is the beginning of the week, and we start 5 minutes. Sunday we will have here. Sunday will be trading. We don't do nothing to engage and to trade. On the Sunday, we are not in great rush. This Sunday, you can have actually the kill zones, ASM. Sunday, and then we have the Monday, and we'll see between now and Monday. We normally engage the market after lunch hour. What and to where have the markets repriced to? Looking now from our perspective, from our analysis, I think we have analyzed and do a thoroughly analysis on the Nasdaq. It's better to go there. We are now seeing that price is trading in a 60-minute tail that we have graded. The upper level of the tail has been graded. There is a SIBI 60-minute SIBI that is in the shadow. We are looking we were talking about in the analysis video about this equilibrium, that we want to see price trade to it and respect it. We want to see price trade to this SIBI and respect it and start trading going lower. For now, we are interested this day to engage the market with this. Take this one off. With the market maker buy sell model, market maker model. We will not engage the market yet. We leave the market to trade, allow the market makers to manipulate, set a trend, set a sentiment, and in relationship to the economic calendar, we are looking at CPI number Monday, Tuesday. We see there might be normal trading day. I trade after 12 o'clock, and Tuesday is a high impact news. You can trade this Tuesday. Wednesday, you can trade it, but only after the CPI number, after 9:30, not ahead of it. 9:30, then you trade, and then be careful of the PM for the economic. The FOM statement will come after 3 or 2 o'clock, and then if that is the case, then the PM session will be quiet or choppy or seek and destroy. Try not to haste for young traders. Leave this Monday out, and then be careful with the 9:30 PPI Thursday PPI number, and after that then you can go and engage Friday and look for great setup after 9:30, 10:30, and on the Thursday. So trading day of the week, you can be nimble on Monday after 12 o'clock, trade Tuesday, leave Wednesday out, trade Thursday after 10:30, and also Friday. For those that are trading with smaller account where your equity is not big for you to assume large risk, trade the micro of these contract, where instead of losing $20 per handle on the Nasdaq, you just risk $2. That is a micro contract. That is it. You can do the markation. Small opening. This is the closing price, and this is the micro. Every handle on the micro is $2 instead of $20 with a mini. This is a mini. It's where we trade, where I trade. The June contract. This is where we have done the analysis. Is on the video. Tomorrow, before the trading open, the trading session open, or even after the session open, I want to see what they do on the London hour. You can do a relative strength study to know which one of the system you can trade. And I like trading the Nasdaq for the risk is smaller with the Nasdaq. With the ES, the risk is $50 per point, and the micro ES, micro spools, is $5. So we had about 21 minute trading after 6 o'clock Most of the time I do this for an half an hour to 45 minutes. The market open, trade lower to engage this liquidity, which are relative equal lows. It has been taken clear. It's rallying, start rallying to engage. Did engage this relative equal, this swing high. It did engage, is not strong enough in my eye, and I think we can rally toward this level and then most likely further, but close below this 4H in the shadow, this 4H equal equilibrium of a balanced price range. That is what our analysis show, and that analysis is been loaded and put here for you to see and to build your trading model around it. It's not a too difficult week. Monday after 11, after 12, you can trade. Tuesday is a normal trading day, you can trade. It's better to leave Wednesday off because of the dynamic, but those that are more experienced can trade after 10 o'clock to around half PM session. Be very nimble at the PM session, that it can be seek and destroy because of the expected FOMC. The broker will be pulling the big money will be pulling their assets. The margin will be increased by the brokers, so it doesn't really pay to engage on both CPI and FOMC, but to wait. Thursday PPI, core PPI is one of the intense number, powerful number too. What you can do is just wait after this number hit the market, you see its effect, and then you engage the market after 10 o'clock, and then Thursday is also a trading day. Have your money management in place. Do not trade without a good money management strategy. Do not trade without first knowing what and how this market can hurt you. This is a very risky business if you do not know what you are doing. If you don't understand the language, you may be cannibalized, and you may become liquidity. It's the saying that we say, if you don't know where the liquidity is, you are the liquidity. And so I am recommending everyone to take sound advice from their financial advisor, and then to engage the market. I'm once more greeting you from Suriname, and I am the consistent, profitable, informed, independent thinking trader, especially the word informed and independent, in the process now of writing and programming my algorithm with backtesting, journaling, tape reading experiences / demo trade and real life trade, so that I can deploy this algorithm for me in the future. It is really the analyst in me that is being built and groomed for consistent trading the market. This is log 7. I've opened it from the 1st of June till now, and we have had it today. What have I not covered? I think we are done. Wait 1 minute. Looking a minute to the market. Have the calendar up. And next you to respect the trading day of the week, as we are looking for high probability setup, low risk entry. We are looking for liquidity, low risk, low resistance liquidity run instead of high resistance, which maybe those afternoon I'm talking I told you about. Success trader, I hope you find some information on this channel that will help enrich and empower your trading experience. Success. Yes, we are in this thing to make money, but again, your risk management, your self-management must bring you to the point that in the process of learning how to trade, you controlled or you dimmed that desire to make money. Success and enjoy trading. Bye.